Hi, Ron here from andrewscourse.com. I'm going to be looking at pivots today, and not just pivots, but what the different kinds of pivots are and how to know where to draw your lines from. So during this video, you're going to understand completely what we do in order to know what to draw the lines from. Okay. Now, let's see, here we go. Okay. Let's get rid of this little guy. Let's bring up a relevant chart. Here we go. Here's SPY. Now, when prices go down to a line like here or up to a line like here, it may be an indication to buy or sell. What you need to do is to use the course methods to determine whether or not this is likely to be a minor pivot up here. We know that it's not a major pivot because it doesn't meet the major pivot criteria. As we go up here, this is a possible major pivot, but it's not probable at this point. And we see that prices didn't make it to the median line. And as prices came down here, for example, this is where we are now, prices have not come down enough in order to declare this as a possible major pivot. So where do you draw the lines from? Well, it's quite straightforward. You take a look at your previous probable major pivots and use those. Okay, so in this case here, you would draw it from the low, high, low, and as prices went up here, you would have been using this particular line set the whole time in the SPY. And what you'll notice is that prices come up to this major ML and they kind of bounce around it. So it's generally, just because prices come up to a major ML, mean that it's time to sell or go short. As you can see, this would have been deadly. Whereas to use one of your standard course triggers to go long here would have been obvious and easy. Now, one of the most important factors in drawing median lines is that when you draw the median line, you use major median lines to determine the major pivots, you use major pivots to determine the major median lines, and you use the min pivots on the min median lines and the micro on the smaller ones. Let's see an example of this, how this is really important. Okay, as you may recall, we had a sell signal right up in here. We gave out that this was an SB sell signal. Boom, and then prices went down to the H. Well, that's nice. So what kind of things were we looking at besides the SB signal? Well, if you notice on the way up here, these this here is your major median line, and prices went up to the major median line, stopped, came down, and went up again. And if you look at your simple, straightforward, easy to understand course methods, you would know that this is a standard NN up here, absolutely textbook, but you need to use the third level of pivots. This is major, then you have your minor, and then you have your third level of pivots. And because quite frankly, if you use this pivot here, whoops, and this pivot here, and these are your min pivots, low, high, low here, that what you found was that prices bumped up against this H line and this H line here a couple of times before it finally went down. So using this as what I call a secondary line, And a secondary or tertiary line is really one that gives you information. So this one here would give you the information of, hey, this is a good area to start looking for a reversal. Okay. Same with this major line here. Good area to start looking for reversal. It's not necessarily a trigger. Trigger is much more intricate than that and will come about at prices when you have these secondary lines come in. Right? So what happened is prices went up, you drew your proper lines, and down she went. Okay. Now the same kind of thing happened over in let's use SPY. Okay, the same kind of thing happened over in SPY. Let's switch to SPX. When prices came down over here, by looking at your SPY chart, for example, you'd see you had your absolutely textbook WN signal giving you a nice trigger to enter the market with and take advantage of the move that came about. Of course, you have the risk of the signal failing, and then you have your appropriate stops. So take a look at, once again, the video where I went over selecting pivots exactly and stuff, and just a little more intricate than what we say here. And what you'll find is that at this point in time, you have this here as the pattern in your SPY. And notice it went up to that area, came down to the MLH line, went up and tried it again, didn't make it, and boom, down she went. And as she went down, it followed the concept of, gee, whatever the distance is from here to here, it made it up. And that's interesting information, but not a trigger in itself. Because it's one of the Andrews rules that if prices don't make it to a median line, then they'll make up for it by going that much more the other way for the next median line. That's level 2 or level 3 stuff, not necessarily something for a trigger. So what happens is down here now at this point in time, we've now had that good old SP4 signal, and what I want is the confirmation personally, because if we get the confirmation, which is a close at a certain value in here, then what happens is our next target is up here and our stops are below here. So I thank you for your time, and get a chance. If you haven't taken the Andrews course, please do. If you have taken the Andrews course, andrewscourse.com, please review your videos and the material in your nice big manual.